Hello and welcome to the Q2 Investor live stream. I'm Lexi Romano, host of Inside Look. On this live stream, we are joined by Jamison Manwaring, co-founder and CEO of Neighborhood Ventures, and John Kabrowski, co-founder and president of Real Estate. We will be taking questions via the Q&A option at the bottom of your screen, and we'll answer your questions at the end of the presentation. Your microphones have been muted. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results and that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from these contemplated at this time, and prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures, certain statements such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results, performance, or achievements to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. So we were so happy to see everyone that came to our Venture on Country Club open house last month. We had about 150 current and future investors that were able to see Country Club's stunning transformation in person. Our guests also enjoyed refreshments from local Chin Up Donuts and were able to tour several of the renovated units. This is our investor calendar looking ahead into the second quarter of 2022. Good news, investor distributions will now be available on the 10th of every month and found on your investor dashboard. We're planning to hold an open house in Flagstaff mid-July at our Eldon property. We will keep you updated with the details as we get closer to the event. Our Q3 investor live stream will be held virtually July 20th. We really enjoy meeting our investors online and in person. The feedback we receive from our investors is such an important part of the success of our company, and we are grateful for your support. So I'm so excited to announce that our series Inside Look is now found on AZTV. Each week, I'll give you the inside look on the progress of each of our projects, Saturday mornings at 9 a.m. We love keeping you updated and educated. Join us on your preferred social media to stay up to date and see the impact we're making in the community. Now let's turn it over to John for a look at what's happening in our Arizona and national markets. John?
Thank you, Lexi. Starting locally in Arizona, the Q1 numbers are in. Multifamily sales in 2022 exceeded last year's numbers by over $1 billion, with rents tracking towards a 25% increase this year. Arizona residents have seen significant growth in the population, jobs, and average income. Combined with relatively low costs of living, this is good news for Arizona and for the Arizona economy. It's continued growth. But this means we still need more housing. With no vacancies and limited evictions, the number of multifamily units in planning and development this year is expected to break records. Nationally, interest rate hikes are causing volatility in the real estate markets. Home loan rates are approaching 6%, and the Federal Reserve is signaling more rate increases to combat inflation. We expect more increases, but luckily, the markets have already priced some of these in. Supply chain issues are still a factor and not showing improvement yet. However, we have planned for this, and we have developed strong relationships with our local and national vendors. There's inflation in all product segments. Consumers may see increases over the next 6 months. Oil and gas prices will continue to increase due to Europe, India, and other countries banning Russian oil and relying on US, Saudi, and other producers. So we're gonna have more of that. But now to Jamison. Thank you.
Thanks, John. And we have exciting news. As Lexi mentioned, distributions are now found on your investor dashboard. This will allow you to view and access your cash available directly from our website, so you don't have to log into a different website now. Distributions will be recorded monthly under your cash balance in your profile summary. And these funds will be available to you to invest in our future projects, or you can transfer them to your bank account if you choose. When you are ready to make a transfer, you can give us a call and we will be happy to assist you. For investors that created a Prime Trust custodial account, we have decided to no longer use these accounts for distributions. And the accounts will be closing at the end of this month. Going forward, we are handling distributions in-house to simplify the distribution process for our investors. If you have a balance in your Prime Trust account, you received an email last week with instructions on how to transfer that balance to your personal bank account. You can also call us to transfer the funds for you. We are also in the process of developing our website, and we expect the site to be fully launched later this year. We want you as our investors to have easily accessible information on your investor dashboard with easy to manage features that help you track your investment performance and view your cash balance. It will provide detailed information on your monthly distributions and have a message center there for you to receive updates. We will keep you updated as these new features are rolled out. And this is something we're really excited about as a team, as we've been working on this for several months now. The Neighborhood Ventures team also continues to grow, and we are pleased to announce that Amanda has joined our team as our newest team member. She is helping us in the digital marketing area, and you will see her face around as well. And we're excited to have her join our growing team. As we've talked about from the beginning, when John and I founded the company, we developed our investment strategy. And that strategy hasn't changed in the 4 years that we have been in business. And we believe this strategy is good when times are good and values are increasing, and in times where values start to flatline, because we know at some point the great growth we've seen in real estate will slow down. But our strategy will work in both environments. And our strategy is three-pronged. The first one is that we're looking for projects in up and coming neighborhoods. So these are neighborhoods that are seeing transitions, where we're seeing additional investment. We're seeing restaurants open in those areas. And those are the areas that we want to get in earlier and see a nice uplift in the values as those investments continue to be made in that neighborhood. The second point of our investment strategy is that we found a nice niche of apartment buildings that are in what's called the mid-market. These are medium-sized apartment buildings, 20 units to 150 units. A lot of times these are overlooked by big institutional investors, but for us, they're a perfect opportunity to go buy a building this size, renovate it, and see a nice uplift in the value of the building. And then the third and really critical piece of this strategy is we're buying buildings that are underperforming from a cash flow standpoint. A lot of times these buildings haven't been renovated for a long time. And as we go do an intelligent renovation, we add value to these buildings, the rents go up to the market level, and we bring an asset that's not performing at a high level and bring it up several notches, which increases the value. We love this strategy because, again, we believe it works when things are good, and if things slow down, we will continue to find deals that meet our strategy. And I wanted just to point out that it's been a very volatile year when it comes to investing. The markets are down. NASDAQ's down 15% this year, year to date. If you're a Bitcoin crypto person, that's down 14%. The S&P 500, which is a broad index that covers most stocks, is down 8%. The Dow is down 6%. This year has been... Okay, we'll be right back with you. Just one second. All right, we're back. So amid that volatility, Neighborhood Ventures projects continue to perform very well, and they're earning a 12% preferred return. So as you look at your portfolio, we encourage folks to have a balanced portfolio. Some people like me, I have a lot of real estate. I love real estate. But real estate is a great investment because it's not correlated with the market like many other assets are. So it's a great investment, and we've seen that come to play this year. Now let's move on to talk about each of our projects. Each property follows the project life cycle of acquisition, renovation, stabilization, cash flow, and then ultimate sell. We also have the project timeline, which shows where the property is as relative to the target hold period. Let's first talk about our most recent acquisitions, and these are some exciting acquisitions that we've made in the last month. Our first acquisition of the year was Venture on Central, located in Central Phoenix. This is a property that I'm really excited about, as we raised $1.5 million from 177 Arizona investors within the first 2 days. We are expected to close on this property this month, and interior renovations will begin in June. We also are in the process of acquiring our second property in Flagstaff, Venture at Route 66. We funded a record rate of under 30 hours with 1.6 million invested from 178 Arizona residents. We expect to close on this property next month and begin interior renovations in July. Now I'm going to turn it over to John to share some updates on our properties that are currently under renovation.
Venture on Eldon is making great progress. 3 units are expected to be completed by May 1st, with an additional 10 units completed by the first week of June. We have flooring installed in all the units, appliances have been ordered, and cabinets are currently installed. For Venture on Broadway, the interior demolition on the main building has been completed, with the second building's demolition scheduled for the end of April. Next will be the interior renovations, which will be starting at the beginning of May. Jamison?
And then this is probably my favorite part, John, is that we have several properties that are now cash flowing. So first off, Venture on Mountain View has been paying an annual 6% distribution to investors for several months. It's 100% leased with an average rent of $990 a unit, but average market rents in that neighborhood are higher at $1,300 per unit. So we'll be raising those rents as those leases come up. Venture on Williams is also paying a 6% annual distribution, and that's 100% leased. Williams' current average rent is $1,420 a unit. The market rent is $1,500 a unit. And as those leases come up, those rates will also move up. Market rates continue to move up, as we see right now in the market, and we are every month looking at where should the market rate be for each of these projects. Venture on 19th is currently has an 88% occupancy. Its average rent is $1,000 per unit, with an average market rent of $1,200 per unit. We are adding washer and dryers to these units, which also helps take the rents up. Units will be brought up to the market rate as leases renew and new units are leased. And then lastly, Venture at Country Club has completed all unit and exterior renovations. The property is cash flowing and operating really well. Next week, we will begin the demolition on the new co-work space, which is above the office. This will be a really great amenity for the folks who are living there. And Venture on Country Club is paying a 6% annual distribution. I also wanted to talk a little bit about our fund. The fund is available to accredited investors and offers a 12% preferred annual return. We will be accepting investments into the fund through the end of this year, and then there's no more investing in the fund after that. In January of this year, we began paying a 4% annual cash return, up from 2% that we were paying last year. And we're excited to announce today that we're going to be paying a 5% cash return beginning this quarter. So we're increasing it from 4 to 5 because the fund is performing so well. We will continue to fundraise into the fund through the end of this year. We will be purchasing assets through the middle of next year, and then we expect all assets to be liquidated by the end of 2025, if not sooner. those are our updates. And now I'm going to turn it over to Heidi to facilitate our Q&A. If you have a question, you can type it in the Q&A section here, and we will go through those and answer them if there are any questions.
So the first question we have, any news about new projects that national investors can invest in?
Well, John and I are constantly looking at new projects. We, as the person's probably alluding to, the two projects that we've done this year were only open to Arizona investors. The reason is they were a little bit smaller than Venture on Country Club that we did last year. And as we saw those projects funded very quickly. One commitment we've made to our investors is that they will have the first opportunity to invest in projects before we open it up more broadly. And so in each of those projects, it was really funded primarily from our current investor base. But we're looking at other projects. John can talk about that. And I think some of these upcoming projects will be a little larger, and we'll open those up to national investors.
Yeah, I'll just briefly touch on that. The market's been great, and there's a lot of product out there, and we're excited to start chasing some of the larger properties. Our construction crew right now is pretty busy with some of the new projects we're taking on. So what Jamison and I are going to start doing is looking for some properties that need less heavy lifting and have more upside by doing some of the lighter work to them. So yes, we're going to be moving into some larger projects. I think it's a perfect time for us. We understand what's going on in the market. We understand what interest rates are doing to the market, and we're going to be ready to take advantage of that very quickly.
And one thing that I'll add, working with John for 4 years, is we're really picky about the projects that we take on. He has a great pulse of the market. We don't want to get it ahead of our skis or over our skis, and we've been very careful not to do that. But we've seen a lot of projects. We pass on most of them, and then the few that meet our criteria, we move on.
Okay, Alicia asked, how do you invest in the Neighborhood Ventures Fund? And then she asked a follow-up, how do you change your status from non-accredited to accredited investor?
Okay, great question, Alicia. So most of our projects are open to anyone, no matter your income level. Right now, we don't have a fund that's open to everybody unless you're an accredited investor. And just so everyone knows what that means, the government says that an accredited investor is basically a wealthy person, someone that has over $1 million in net worth, not including your primary residence, or you make over $300,000 a year in combined household income. So it's about 1% of the population who actually qualifies as accredited investors. If you are an accredited investor, you certify that on our website and you can invest in the fund. If for some reason there's a problem with that, you can call us and we will help clarify that and change your status from a non-accredited to accredited investor. Without getting too far down the road, I will say our ultimate goal is that our fund will be open to all investors, no matter your income status, with as little as $1,000 investment. So that's where we're going, but it takes a little bit of time to get there.
Dan asked, where on the dashboard can you find distribution payments? So Dan, you'll be able to, when you log in, it'll automatically take you to your dashboard where you'll see the cash available balance. If you'd like to see what properties the distributions are coming from, go ahead and click Investments and Documents, and then select Earning Report.
Thank you, Heidi. Heidi's the expert on the dashboard, so she answered that one. And I will say our current dashboard and investor portal gets the job done, but we want it to be better. This is something John and I have seen eye to eye on from the beginning, is that we want this to be a very tech-friendly company and that our investors can easily access all your documents and everything at the dashboard. And we will say we have some work to do to get it there. We're working on that right now behind the scenes, and we're excited to release that later this year.
Tammy asked, what do you see as the impact of interest rate increases? Are we always cash buyers, or will there be higher costs?
Well, there's no surprise, interest rates are going up. We are cash buyers in that we pay the seller cash, but we are always going to try to find some leverage in there. And because of the way we've been structured, and because of the great lending relationships we have, we're getting better rates on some of our financing. So am I concerned about the higher interest rate market coming up that we're going to see for some period of time? No, I'm excited for it because we've been waiting for this to happen. A little volatility in the market always shakes out the investors out there. And there are some people out there that aren't positioned right. We've got long-term debt on majority of our projects, 10-year debt. So we always project at least a 3-year hold. So we're fine. And in addition to that, Arizona's got tremendous rent increases. 25% rent increases make up for interest rates pretty quick. So when you see those increases in rents, they're making up for the increases in our interest rates. So that's really the short story going forward.
Tammy also asked, why are you dissolving the fund concept in a few years?
The fund that we have currently we will stop fundraising on it this year, but we expect to have a new fund available to invest in right when that one closes. So we're working on that. We've been working on it for some time. So we are not changing the ability to invest in a fund. It will just be our next fund because this one has a 2-year window of fundraising, and then the fundraising moves to the next fund.
Is it called a closed-end fund?
Yeah, and part of that's because it's a closed-end fund. Our current fund is a 5-year fund. First 2 years we're fundraising. As we fundraise, we deploy that capital, and then by the end of 2025 at the latest, the fund will be closed and all the assets liquidated in that period of time. And I will just say the fund's doing very well. It's invested in the projects we did last year. It's investing in the projects this year. And so we love the fund concept. Folks like Tammy and other investors jumped at the chance to be part of it. And we're excited to do Fund 2 next year.
All right, Mark asked, can you share the net returns for the non-Neighborhood Ventures customers on each of the prior projects? Or in other words, the other money?
Say that again, Heidi. I'm not sure I understand the question.
Returns for the non-Neighborhood Ventures customers on each of the prior projects.
I don't know if there are not.
Yeah,
We only had neighborhood investors.
yeah. So, yeah, they're to John's point. I think asking the question is if there are other investors in our projects. There aren't. It's only Neighborhood Ventures preferred investors, and then the company.
All right, Matthew asked, are the 2 properties, Route 66 and Central, in escrow still open to new investors?
No, no. As Jamison mentioned, we sold those out pretty quickly. They filled up very quickly, and we have a philosophy that we want to make sure we offer our new investments first to existing investors. That's something we do to thank you for being involved in other projects. You get first dibs at it, and then as we take on new projects, especially bigger ones, depending on how the funding is going, we'll allow new investors to jump into those, which is why when I answered the question a few minutes ago, we're out looking for more properties right now.
Brianna asked, do you foresee any major concerns with the ongoing labor and material shortage, as well as the rising cost and availability of building materials?
That's going to pose a challenge no matter what. But remember, all boats rise with a rising tide. So with the cost of materials going up, with the cost of labor going up, with this tighter supply in both those resources, that ends up pushing up values. It's a component of our inflation right now. So over time, buildings are going to be worth more. Rents are going to continue to go up. We're going to see people getting paid more in Arizona. We're going to see more high-paying jobs, and all these things will lead to higher prices for properties. So not really, but I'll let Jamison touch on that also.
Yeah, an inflationary market is not really good for anybody, but it especially impacts folks who don't own assets. If your money's all in cash or you don't have assets, you're the one that gets hurt the most because the cost of living increases, but you don't have assets to offset that. If you own a fixed asset like a Neighborhood Ventures property, those assets have continued to move up in value, and that's offset the high inflation that we've had. So just kind of to put it simple, you're getting a 12% return on a neighborhood ventures project. And if inflation's up 7 or 8%, you're still ahead of the game. Where if all your money was in cash or you didn't have any investments, your net worth goes down by that inflationary amount, that 6 or 7%.
All right, that'll go ahead and conclude the Q&A section.
Hey, great. So this has been a great live stream. Those are some great questions from our investors. I just wanted to thank everyone on our team, John, Lexi, Heidi, Caleb, Amanda. Our production team has done a great job. And we have a great investor relations team, Colby, Heather, Oakley, Jacob. I'm probably missing somebody. But thank you for all your work. We look forward to seeing you again on the next live stream. And then we look forward to seeing you at the Eldon Open House. Thanks for joining.